This is Satya Pradyuman of Cirrus Research. The latest issue of the Looking Glass report's just out. The title, Leveraging a Value Cycle Expressed Through ETFs. Generally, the Looking Glass reports do focus in on the ETF market. We tend to tie together the equity outlook as expressed through ETFs. In this case, our work is definitely centered around more of a value overweight. This is our Cirrus style oscillator. Basically, this reading now has gone overweight value. At this range here, the upper range, that's an overweight growth. This is radically different because we have not seen an overweight in over 20 years. What's interesting is even with the reopening trade, this model signaled a lean value. This was a period where casinos, airlines, etc., the full reopening trade was on, which is a very value cyclical run. So we're taking this seriously. Part of it is that the credit cycle is easy. The Fed might end up being a support for a more cyclical run. And also the profit cycle is bottoming. It's not at the peak. So these things do line up for why you could see a pretty strong value run. So the question is, how do we put this to work? What are we seeing in the ETF world? And this scatter plot looks at a bunch of deep cyclicals value funds and even small microcap. And what you'll find is that the x-axis here refers to just the last 6-month price return, and the y-axis is the last 18 months. And what you'll notice is that, yes, NVIDIA is working. The Qs are working. But when you look at this sampling, the absolute rates of return in these cyclicals have also been significant. This is something we've been flagging for a while, that in parallel to a pure AI trade, we also have a real economy trade that's running. So in this report, you get a chance to look through some of the ETFs that really warrant a closer look. In the report, we also go through our forecast models in terms of, even if they've performed well, what's their expected return? What are the fundamentals saying? So to some degree, maybe if they performed well, that's the best they can do. But if they're performing well and their expected returns are also high, that's a good thing. Take a look at, and as always, love to hear your feedback and your questions. Thank you.